That's all right. Take your time. Yeah, yeah. I'm good. How about you? I know you got a lot going on. Yeah, I know about that. Well, it's also about trying to balance and everything else out too, you know? I mean, you got some priorities, and I think the house is the big one. But anyways, listen, I want to thank everybody for coming in. I'm Danny Riley from Mr. Top Step and Pitbull Traders, my partner Marlon Cobb. And I want to talk a little bit about Marlon. We've become very, very good friends over the years, and he is the heart and soul of our chat room, all the software that's been made. For those of you that are not didn't take advantage of the pit room offer, we are now we're live streaming out of the pit room, and the pit room was designed for education. And but I want to flip real quick. We have a lot of people in here, and one of the things that we're always trying to do is we're trying to get people engaged. And it sometimes can be very boring when you're talking and people or you're posting and people don't respond or put things up. And one of the things I've always tried to say is that, hey, keep the flow going. It's when the flow is moving and people are talking and sharing ideas, that's really, really what it's about. I always say don't trade in a closet. And when we created Mr. Top Stop, it was really to get out and share information about what was going on in the trading floor and some of the flow that we created from there. Well, hey, Bruce, we've got a lot of really good flow in here. And we've got a lot of really good traders. And I implore you guys, when you see something, just like I would do on the trading floor, post it, put it up. It doesn't matter. It doesn't matter if it's good flow, bad flow, unimportant flow, it's flow. But if you see something, um, everybody's here to share. And I call it our collective. So thanks for coming in. Thanks for coming in, Marlon. Um, what we're going to do first is we're going to go over Spygate. And I want to talk real quick about how Spygate came across. We had a guy that we were working with years ago who had a not really wasn't really the same widget, not even close, right, Marlon? I can't remember the guy. I can't remember the guy. He's kind of whacked out. But anyways, he wanted us to really take over his company, and it was just so big and so many things that we could have never have learned about. It would have. He was doing classes that were like 20 hours a day for 2 weeks. And we didn't have time to do that. But he had one tool that kind of vaguely showed like when programs were going off. Um, and I believe, really, I was just talking about this with the Pitbull today, and I put something up. I was live and talking about how important algorithmic and high frequency trading have become. And back when I was doing these programs on the trading floor, they used to say that program trading was the cause of the 1987 crash. And in reality, that wasn't true. Um, I know that when I took the $10 million hit in the flash crash, that they blamed it on a rogue trader from London, and that wasn't true. So there's always going to be a scapegoat for when the exchanges don't want to accept responsibility for ways that things work. Back in '87, they just didn't have the capacity for the volume that was going through. And the New York Stock Exchange, accused the Merc. The Merc accused the NYSE. Hey, you know what? That's all changed. It's all electronic trading now. And what I was talking about, and I was posting in the room on my live stream, we're never really going to be able to compete hand for hand with some of these big firms. Citadel, they pay over $2 million a month for data feeds from the CME. They make all these mega prop trading firms. They're the maybe you're not paying when you use your phone app to buy and sell options or stocks. Trust me, the market makers, these big market making firms, they are the ones that are taking the other sides of these trades. They are the ones that are supplying liquidity. And trust me, every time you give up an edge to get in on an option trade or a futures trade or a stock trade, they're making money on that. And they're laying off the risk automatically. So, anyways, Marlon, let's talk Spygate. Can you can you briefly kind of talk about the meter itself? Now, Marlon, this doesn't show the names of the stocks, right? Okay. And I mean, what I get out of it, I mean, I particularly like looking at it on big gap opens. Um, I think you can get a feel, you can get a good feeling for kind of the order flow of the programs. Now, that doesn't necessarily mean that that's going to be a a directional trade, but if you see consecutive sell programs off a gap up open or something like that, it's generally meaning that there's probably more programs to come. Now you can go back to the open, right? Um, this morning, yeah. Can we go back there? So we had a buy right off the open. No, that's not there yet, right? Oh, okay. All right. Well, I mean, you could go back to go to 1234 again. Right. So you basically see a big sell program that hit right around that time. But if you go back up toward like 1252 and you look at your chart on the S&P and you took your chart and you line that up, you would be able to see that they did multiple sell programs into there. And that's when the future sold off. And how many sell programs were there in a row? Yeah, I mean, I looked at Spygate on Friday. I mean, that was incredible. I mean, I didn't look at the total number of cell programs throughout the day, but it had to be a massive day for programs. And now, is there historical data for this, Marlon? And the differences are the total dollar amount. No, what is it? Oh, the dollar amount is the total dollar amount on the far right, right? Uh, Now, at one point we were kind of talking about whether or not we couldn't take the Spygate data and match it up with the MIM. Is that something that you could do? Right. Well, that's what I'm getting at. Is there? I haven't really looked at the historical data on the MIM to match it, or on Spygate to match it up. But I bet if you go back and you see multiple cell programs before the MIM comes out, that probably there's a bias to cell imbalance. Now, I haven't looked at that, but it would make sense because we see a lot of moves in the 350 imbalance meter, the MIM, um, that sometimes they sell before the meter comes out, you know. And Friday's MIM was a little weird, wasn't it? Um, it it started out to be like a small cell, and then the but didn't the Nasdaq flip to like 4 billion to sell? Right, right. But then what we've also noticed, and we never really saw this before. Usually, I used to trade the MIM a lot, and I just think what's happened is that the amount of program trading that's the algos, whatever, well, all the different types of electronic programs that had. There's just too much crossfires going on. It's harder to read now. And what I always noticed is that like around 325, if you start seeing bids coming into the S&P and the S&P starts going up in that time frame, and maybe even at 315, it depends. Um, that usually if the S&P kept going up into the imbalance, that you would see a buy imbalance. And then if it worked correctly, you'd get another pop and you could get out into that. But now it seems like sometimes you don't get the same amount of movement that we used to get into the 350 imbalance. Maybe it's just kind of being read too much by too many people, you think? Or is it just that people are loaded up and then you got to kind of have that counter down move and then they go back up? It's kind of all changed. Right. Well, I mean, one of the things I learned from being on the trading floor, we did a lot of MOC orders. And particularly, I think the one account that stuck out the most was Raj from Bank of America. There was very, very large prop trading desk out there. And I know JP Morgan and Goldman were big, but Raj had 25 guys at his desk and he would make prices for anything. I mean, people would call up, give me a price on a million IBM. And he would obviously, and I'm not kidding, he didn't have to have a calculator. He'd look at his screen, he'd look at the OEX, he'd look at the SPX, he'd look at the S&P futures, take the other side of it, lay it off. But a lot of times on those, everybody knows about long and short books, right? If the markets are higher and your long book is making money that day, you don't necessarily have to kind of do any adjustments, or maybe you do. I don't know. I don't know all the particulars of these positions in the long and short book. But if you're a short book, at late in the end of the day, your short options positions or futures or whatever is being, you're losing money on your short book. Raj would come in and he'd buy 10,000 mini S&Ps, or he would go to the OEX or the SPX and buy thousands of calls to offset. So what I've always kind of thought, and I still think this, and we see this a lot, is that back in those days, Raj would call up. He wouldn't come in at 350. He wouldn't say, "Hey, Danny, buy 5,000 or buy 500 big S&Ps or buy 5,000 minis, um, exactly at 350." He'd call me up around 325. And that's why I always talk about that 325, 330 time frame. Because that would be when he would start coming in. Now, again, the desk had a lot of flow. They did business for huge mutual funds, huge, well, a lot of ETF funds, Fidelity, all these big funds, and hedge funds, gigantic hedge funds. And Raj would know, that what these big institutions were doing. So, and all their systems were set for 350, the reveal, right, Marlon? And so that's the primary time that these institutions and big accounts come in and offset or buy or add. And but for Raj, and I don't know if this was really called front running because he managed a big long and short book. So he maybe he knew maybe he knew that the desk had big buy orders on the New York Stock Exchange or on the Nasdaq for the close, and maybe late in the day he just felt that he wanted to get protection for his long or short book or add to protection or even add risk. And that's really what a good trader would do, right? The markets are going your way. If the short book, he may buy 10,000 futures to offset some of that risk, and maybe he'd go into a long book and add, right? I mean, that's really the way it would work. It's not necessarily just about hedging or protecting. It could be about adding. And we see this, one of the things that I always have done is I've always found you can look at a company called ETF.com. I'm a subscriber, so it's only like $20 a month, but you can also go into AI and you can ask AI, what were the net inflows of stocks in the first week of May? Or what were the inflows, at the end of May? Or you can get but regardless of that, while we were even going down last week, there was still big money going into ETFs. And I think the ETFs are really where things are now. So we're 10 minutes away from the imbalance. So we have a thing that we always kind of call this, and the Pitbull used to say it, the guys with the better seats. So are those institutions, the big trading desk, the Goldman Sachs that's got in the old days, I mean, it wasn't, nobody really stopped it from happening. You'd have the prop desk sitting next to a sales desk, right? And the sales desk would be yelling over to a guy, say, or they knew. So my thing is, the guys with the better seats, they may be buying pre-close, knowing that there's going to be a big buy, or they could be selling pre-close, knowing that there's going to be big selling balances on the close. Now, I think we're all old enough to know, and we've been in the business long enough to know that, it's not necessarily a balanced game. It's kind of like what I was talking about with Marty at lunch today. He's like, oh, yeah, I can't make any money doing this, blah, blah. And I said, Marty, if you're not taking the risk on the way down, I'm a momentum guy. Well, yeah, I don't see that there's a lot of momentum here. But, if you're looking at a stock that's $90 and you think you want to buy it, and then you wait for it to go to 110, well, you just missed $20 on that stock. And that would be the case with Marty a lot. He sees things, he wants to buy them. He looks at all these news letters that I think are just wrong. He gets filled with all this disinformation, and his own work tends to be a lot better than that, but he doesn't follow it. And I believe that, yeah, he said, well, you can't be a momentum trader. Well, we've been looking at momentum there was 9 straight weeks of the S&P and NASDAQ going up. and I don't think it's was out of. I wrote about it in the opening print last week. I got to admit, I haven't been trading well, and they do say that those that write newsletters can't trade it. I mean, I try my best, but um, I did. I remember you see the OP every day, Marlon. I did that whole thing on the Magnificent Seven, and in one and from like their recent highs, the Magnificent Seven was down like $1.4 trillion. And if it wasn't for two stock moves, I can't remember, was it Apple and Microsoft, or Nvidia? If it wasn't for two 4 and 6% moves, though those two stocks, had they not gone up in a big percent over of several days during that time frame I was looking, I was going back like anywhere from 10 to 24 days. And I don't know that that's a really great example or how it's really done. I'm just doing it on my own. But if two of those stocks had not had big percentage gains during that time frame, the Magnificent Seven would have been down like $2 trillion. So I and then on the bigger picture on the top 25 stocks, I wrote about that too. I just think that this whole move down, I think it was overdue. And when you start talking about higher interest rates, you start talking about overheated AI and technology stocks. Um, that's what we got. We got to blow off top. Now, I don't know. I mean, I don't know what you think, Marlon. Do you think we're still going down, or do you think it was just a? Very good. Yeah. Well, I mean that I also put Entropic into that opening print, and a lot of people were that was a article that came first out in the Wall Street Journal before it hit anything else. And Marty didn't even know about that. I said, Marty, I don't know if you read that Wall Street Journal article on Anthropic talking about they should slow down AI. Um, but yeah, that was the one thing I didn't mention about how the markets got hit. That did play a big part in what was going on. It really did. And Trey is amazing. I don't know how many people are connected to Trey. I met Trey years ago, and he's got his own room. He is more of a swing trader, and he has a show that we do every Sunday, what 5:30 Eastern time, Marlon, and it's become very popular, right? Yeah, yeah, and we so so in the first week of June, um, equity funds bought 7.3 billion. They put 7.3 billion dollars into stocks. Um, let's see, technology sector captured 6.62 billion. Um, oh, that's no, excuse me. No, it's the other. Mutual fund flows brought in 7.34 billion, and technology sector captured a vast majority of the volume, drawing a massive 6.62 billion in weekly net inflows. So while this is going on, and I did read an article about, I think they said it was the top 10 hedge funds, and they were all over 20 billion, but that's not even that big now. Um, they were huge buyers last Wednesday, Thursday, and Friday. So I can't predict what's going to happen, but you know what I own mutual funds myself. I mean, I when you look at moves like that where the Nasdaq sells, down 7% in 2 sessions, I mean, it's a reason to get concerned. I agree with that. But I mean, historically, especially in a during a midterm election year, the stats are not that great. We knew that going into the month. So Marlon, we've got what about two 2 minutes to go for the MIM? So now you've stacked Spygate and you've got the MIM below, right? Okay, so if you could do me a favor, once the imbalance comes out, and I think we really should run this till 4 o'clock because the new thing that's happened, it used to be like there wasn't a lot of action going into the 4 o'clock close. Everybody's zeroed in on the 350 time frame. But like I said, and we talked about this just now, things have really changed with this. I mean, I think everything's constantly evolving. And now it seems like a lot of times, believe it or not, there's a big move that happens after the MIM, but it happens at 3:59, like literally a minute. Yeah. But I mean, recently we see big moves after 4 o'clock too. I mean, that used to be that used to be like the quietest time ever. And it almost like somebody woke up and said, "Hey, you know what? There's still an hour left to trade. We can still work our shenanigans around with this stuff." And they do. Yeah. So so with the markets up, I think you could be right, but I mean, what I want to do right now, I want to watch Spygate. I want to see if there's any correlation between what Spygate's doing and what the MIM's doing. Now, is the MIM running right now? Oh yeah, we just got it out. 1.9 million to buy. Spygate. That's all right. And then can you put up the whole MIM? Because I'd like to be able to go through the stock part of that. MIM's still honking. There we go. So that's all markets, but you do display the NYSE, the S&P, and the NASDAQ. Can you click over on those? There you go. Well, it's funny that you mentioned that there were more sell programs and buy programs, and we've sold off into the close. Yeah. What is it? Yeah. I'm sorry. Hey, yeah, there he is. Hey, Trey. So Trey says, quick comment, decent bounce, but we could not crack that low volume area. There he is. Let's check out that chart.
Yeah, can you hear me?
Oh,
Excellent. Yeah, I just saw you. Thank you, Marlene. A little throwing my video up there, and this was one of the things I was pointing to yesterday. Give me 2 seconds. I'll throw the Nasdaq in there as well. But I highlighted in the video. I don't want to do a screen share, but pull up that chart that I just posted, and you can see the low volume node right above. And I said I highlighted it with Bitcoin and followed through with bonds. This is a shorter time frame, but I really expected to bounce off that support region, support level that I highlighted, but said, the real measure is how strong is the bounce going to be. We got to the high end of where we should. So that's not, some weak lane bounce. Now, what I'd really like to see is a little bit of sideways action, and then we have to push up towards 7,500 into that low volume area above today's high.
I
If
agree.
we really roll over and push towards the lows, that's what I highlighted on Bitcoin. I was like, this is not what you want to see. Go up, test resistance, and roll over. If we go sideways, that's fine. Rolling over, not so good.
Yeah, we need a couple of days of back and fill.
Yep, absolutely. That would be very okay.
Yeah.
Turning over in here, let me post the NQ right now. You can see, the same concept where the volume disappears, and it's not a super short-term chart. That goes back, it covers the whole consolidation range, and there's that low volume area just overhead. So something to watch. Decent bounce, still not out of the woods. That's what I would say.
Well, your show's been picking up steam, huh?
How's it? I'm trying to keep track how many. It looked like we had a couple hundred last night.
Yeah.
Between YouTube and on there, so that's great. I'd love to have some questions. If we get a little more interaction, that would help me go direction about what people want.
And you know what, I always encourage people to ask questions. And that's one of the things we've got to work on in all the rooms too. There's over 500 people in the different rooms now, or I think even over than that, right, Marlon? Total. And but we can't figure out how to motivate people.
Yep. And I understand it. It's there's no, if anyone's listening right now, there's no time frame on it. Throw questions in the chat room and I'll get to them when I see them. But it's that would be great. So anyway,
Yeah.
There we go. There's the bell. How'd everybody do today? Yeah, I think so. I want to see tech did well, which that was, of course, all important. And I wanted to see how some of the other sectors did. XLY didn't bounce that much. Neither did, industrials. And then financials are down a little bit. So it looks like we just rotated back towards tech, just from the first very superficial view.
Yeah.
Okay. Which makes sense. Makes sense. The next couple of days are going to be good. How did bonds do? Okay. They just sort of chopped sideways. A little, yeah. Not great is the answer. And the dollar.
Why? What did DXY do?
DXY held up. It was down. It was basically flat on the day. Pushed a little higher and closed basically flat on the day. So no give back at all. The Fed's in a box.
Yeah, they are.
They really are. I don't know. And I think that has incredibly important implications. I don't think anything plays out in the next month or so, but as we move towards the fall, it's going to be a little more difficult.
Yeah. And right into the elections too.
Yep. And crude, of course, is all important. It was up $3 overnight and then gave back a lot of it. I got crude. Yeah. WTI up 70 cents and Brent gave a lot back as well. So as long as that goes sideways, we really need that to give up the ghost for inflation to go away. And I don't think that's going to happen for a little while.
No. So I think that's the big concern too.
Yes.
And you got CPI and PPI out this week. So
what are the dates? Is it Wednesday, Thursday, or Tuesday?
Wednesday, Thursday, yeah.
Wednesday, Thursday. Okay. Yeah, we'll have to watch that.
And I think Cisco reports, right?
I don't know.
I think so, on Wednesday.
Let's Isn't I think
SpaceX Friday.
I thought Thursday. Okay, yeah, Thursday for Friday probably. Probably prices Thursday to trade Friday. Yeah, I think so.
Yeah, and one of the things I've I just remember very clearly, and I'm not saying this is the same thing, but in 1990, in 1999 and 2000, I don't even remember how much the NASDAQ rallied. It was like 70% or something like that. And then
Yes.
they put out all those different IPOs, and that was the top of the market. Now we're seeing a lot of IPO activity. I think the highest in a couple of years. And then
Yes.
you got like 1.8 trillion in SpaceX. And the other thing is, they have a big problem with you could never get preferred stock. I mean, it was always kind of given out to like the big clients and stuff, but they've been advertising this IPO. You can get it on most of your whatever mutual fund that if you're trading your own account, they're advertising it all over. You can get this stock all over the place. I mean, so I'm a little concerned about that, but anybody in the room have any thoughts on the IPO on Friday? I mean, I'm a little concerned. You put that much, 1.8 trillion. I mean, I don't know. I mean, are all those people that buy that stock going to make money on it the first day?
That's the less sophisticated investor is going to be in there, and I don't know what their tolerance for pain is. And it might be a great thing. It sure looks risky. They're presenting it as, hey, we're making it easier for everyone to get in, but I don't think that's how it's going to play out.
Textad just put in that Tom Lee's clients are scared that the SpaceX IPO will put a top in the market. I don't know. We haven't had, other than the 2 day down move, we haven't had a lot of down moves. We hadn't had like a 1% down move in the S&P, and like I'd have to go back and look, but I was writing about it. And to tell you the truth, when I look at it, I think to myself, it was overdue. I mean, we weren't really having any major pullbacks.
Yeah.
And there's always got to be washouts. There's always got to be days where the thing goes down and washes people out. I think there was an article, I can't remember, Marty told me about it. I didn't get a copy of it, but there was like massive hedging that was being done on Friday. So, the jump in volume probably had a lot to do with that late day hedging.
Not even Friday. Friday, I would think it wasn't on Friday.
Oh, yeah.
Friday wasn't bad at all. Yeah.
I know Marty has Lowry's. That's a good company for tracking that stuff. But I'd be surprised. We didn't have a 9-to-1 down day on Friday.
Yes.
Well, the other thing,
hit really hard, but it wasn't like across the board.
the other thing is, it looked like they were rotating out of tech and buying Dow stocks.
Yep.
Wow, that's incredible. All right. So, anyways, Trey, why don't we get you back up here more often?
Sure.
I mean, really, it's I think there's more people out there that are interested in, the type of trading you're doing than trying to. We've talked at length about this. The scalping is very difficult to do.
Yep.
If you hit it right, you're great. But I think that what I've learned is if I make money in the morning, I feel like turning the screen off. It's like the longer you stick around for this, you're more apt to lose your money. But if you're playing with the casinos money, great, but you get it done early. But I think the trend following is really, really, and I talk to Tom about this all the time too. It's really a much better way to go. It really is.
Let's have a more in-depth conversation about like what more I could do. Is it idea generation? Is it just identifying levels? Is it? I'm not sure what the audience wants.
I think it's a little bit of all the above, but I mean, and I know that you would not, and I know that we would not suggest any, whatever. I think it would be cool for you to say, hey, this is a stock I'm looking at. This is
Sure.
I bought it here, and this is what I'm looking. Whatever, Trey. I mean, you come from a prop trader background, and I know that you've got a big group of guys that you talk to every day. I think most people in here are really interested to see what other good traders are doing, to tell you the truth. What markets you're looking at, what levels you're looking at. I mean, I can pull up levels on a chart, but I mean, you have a much better, you're much better set up for this kind of stuff than.
Sure. I'm happy to do it. It's as we talked about before, mornings are a little difficult just because, my eyes are on the screen, but starting by about 11 o'clock or so, I can, hey, this is what I'm looking at. And maybe each evening, just like a, 5 to 10 minute and even shorter version of what I do Sunday night. Like, okay, this is what I see setting up, and this is what I'll be looking at in the morning, this level here, something like that.
Yeah.
Could do
Well, I
that.
mean, I think it would be cool, like, you do your 5:30 on Sunday night to come back and talk about some of the things that you talked about and see how they all line up. How they,
Yep.
I mean, a follow up from your Sunday night show that you do.
Okay. Yeah, I tried to do that a little bit more this week. Like when I highlighted, like I was talking about Bitcoin last week and I was talking about this week, and some things are setting up for some larger trades. Like that 73.50 line in ES is a big deal now.
Oh yeah.
If we get through that and, it's not a hair trigger we need to accept, we could get a false breakdown or something, of course, but I think everyone understands that. But, that's my level. If we go through that, I'm going to generate a shopping list of shorts. I don't have one yet. I really got to spend time on that. I'm looking for the weaker names and see what happens. But also, I'll be shorting the queues like crazy.
Yeah. Now you've had a strong opinion on Bitcoin. Are you still looking for lower?
No, I don't have a strong opinion on Bitcoin. Actually, I really don't.
You did.
Nope. It was just how clean the setup was. It just from going to like massive range to really quieting down to just this like listless rally. Marlon, can you throw a longer term chart of Bitcoin up that shows some of those levels?
When it got up to around, I think it got up to 83,000.
I'll just sort of I'll try and throw dates. Where is it? There it is. Yep. So I'm looking at like the listless rally from like the very beginning of April to the very beginning of May. So we went from 65,000 up to, exactly 83 over a month with low volume, no real push. And then that 83, technically 84 level really looked like resistance. And that's when I was like, hey, if we can't crack this is going to be a problem. And that setup. And then when we started that sale last Monday, I guess more or less Tuesday, Wednesday, and rolled right down and set up, I was like, oh, this is bad. And then we saw Wednesday, Thursday is when we really got hit. I was like, okay, I was very careful to say this is not a leading indicator, but I do think it's a measure of risk appetite. And we went and tested resistance and rolled over and gave up that whole range that it took over a month to build in just over a week. That's much more powerful selling. And I saw other setups that looked the same. Go to ZN, and the fact that it had some weakness for the first time in a while, and it rallied right to a resistance. Excuse me, I'm trying to find it on my chart so I can speak specifically to dates. Where is it? There it is. It just had the same setup and it rolled up to that resistance level and couldn't get going. It's much smaller and much shorter term. I said, if we roll over from here, the last thing we want is 10-year bond to follow that sell-off that Bitcoin showed. Oh. We got a little bit of it today, but on a much smaller scale.
No,
exactly what you're looking at. See that?
Are you surprised about gold and silver?
Yeah, a little. You know what? I'm more focused on that is seasonally.
Yeah.
It's much more, you get a lot more strength out of it in September. I did buy the dip a week and a half ago and got stopped out. Everything I see fundamentally says it should be rallying, but it's not. We are getting a little rally in the dollar. So it's not shocking, but I do think it still looks very good longer term, but I'm out of it right now.
Yeah.
I do think the dollar, I said a lot about this. I think the dollar is going to break down eventually. The chart that I show is, it's been in this tight range for 6 months now, and it could go for a while. But what I'm trying to figure out is whether energy or gold and silver or which weak dollar play is really going to lead. Last summer, it was obviously gold and silver, last fall, I guess. But now I really, with the supply chain, with what's going on in the Middle East, I think it could be energy that really leads us if the dollar breaks. But I'm spending my time thinking about that. And I do have some oil on now. I bought a little bit through last week. It's very small, and I'm looking for some strength to really lean in on that.
And if you were looking to short the dollar, what kind of trade would you make in there? Would you
You used to be able to trade the dollar futures. I missed that. So you can buy euro, but what I really do is I look for the weak dollar plays. Gold, silver, energy, copper, some EEM stocks. I would love it if they had a dollar contract, but the most linear thing I can do is just buy the euro.
Yeah.
So it's not.
Yeah, they did have a dollar contract at one time, didn't they?
Yep, absolutely.
Was that the
CME?
Did the CME have that?
Probably. It must have. I just traded it through Thinkorswim, or I think I had Interactive Brokers back then.
Yeah.
But it just showed up on my screen, and I did well. I mean, this was 2010, 11, 12, the early days of QE, and the dollar got smoked. That was a great time to have weak dollar trades. Yeah.
Well, are you long term concerned about the dollar?
Have we passed 40 trillion in debt yet? Yes.
Yeah.
I don't know what the alternative is. I think that's a fair point, but. And I think that there's a pretty conscious decision from the people who know the game, i.e. Bessent and other members at the Fed, that they think the only way forward is to deflate away the debt. Trump says it. He doesn't know the language he's saying, in my opinion, but he's like, hey, we're going to grow our way out of this. We're going to deflate our way out of this.
Yeah.
We're going to run it hot. We're going to have inflation hot. We're going to have high GDP growth. And that will help, but it's going to be really difficult for the lower end of the income spectrum.
Keith B says the DXY is teetering on a trend line back to 2011.
100% agree. That is a major trend line. It's only got like three points, but here, if you'll let me, can I take over sharing my screen?
Yeah.
All right, share, cancel. There it is. Short screen share. And when the pit room include okay. Give me 2 seconds. Sorry. Yeah, win the entire screen. Okay. There we go. Okay, bonds, and so that's my dollar chart. And you got to back out to weekly because this is so long.
Yeah.
And that's me. So this is the 09, 08. Well, let's see. That's November 09. So I guess we got a little rally in there, but this is, May 11. Yeah. Who was that? Keith nailed it. 2011 bottom. A big test here. This, I guess, is 21. So post-COVID. But then we came in and, you look at it like, okay, 2 data points. We came in and tested. Okay, one false breakdown here. And this to me is pretty firm as well. That's a real dividing line, top tier. Okay, a little pokes through it, but then it's support right here. And now this is April of 25. This is an over 1 year consolidation. And yeah, could we break up? Sure, absolutely. Do I know anything that anybody else doesn't? No, I don't.
Yeah.
But everything else suggests to me that we're going lower. When you look at gold, when you look at the dollar, when you look at fundamentals, when you look at rates. So let's put together the picture. This is the dollar. This is yields in the same time frame. Up here, consolidating at the highs, breaking out. So this is a tough one, and I made reference to it. I think a week ago on my call. Rates going up should take the dollar up, right? You should get demand globally for higher rates, and they should be buying dollars to do it. But if it's because we're monkeying with our plumbing, for lack of a better word, too much, and we're letting inflation run hot, then I think you get the exact opposite. And I think you get, higher yields and lower dollar. And if you get that combo, I'm going to own all the gold.
Yeah.
That's just a bad setup. I think you can make a lot of money. And I think that's possible. If you'll indulge me a brief story, there was a gentleman, his name was Lyle Gramley. He was a former Fed governor under Volcker, and he went to the sell side in, I don't know, before I did. And I met him in about 2004 or 5, right when Greenspan was starting to raise rates after 9/11 and the recession and everything that came out of that. And I owned a lot of housing stocks back then, Pulte and I can't even remember some of the other ones, D.R. Horton. And I was talking to him and I was like, I'm really worried about inflation and Greenspan's going to have to get too aggressive to respond and raise rates, and that could snuff out the housing trade. And in 2000, it was latest 2005, he looked at me and he said, you do not have to worry about inflation until 2020. And in an era when people very rarely make a prediction past the next quarter, maybe the next year, I looked at it, I was like, what are you talking about? How can you make a prediction 15 years in the future? And he said, it's just demographic trends. And unless we're willing to put grandma on the curb and not pay for her healthcare expenses, our OPEB, other post-employment benefits, Medicare, Medicaid, everything that goes with that is going to balloon in the 20s. And he said, here are the things that you're going to have to look for. He told me, again, 2005, he said, here's what you got to look for in the 2020s. And unfortunately, I only remember 2 of them. But he said, the Fed is going to get politicized, i.e. there's going to be a lot of pressure from other branches of the government, and the Fed is not going to be, quote, as independent as it was previously, which I would argue has happened. And he said, we're going to start talking about issuing much longer term debt. Right now, most of our debt is financed by, notes and bills. He said, we'll talk about issuing more 30 years, more 50 years, maybe 100 year. But also, even within that, we'll shift the issuance to much more longer term. Instead of funding with 6-month, 9-month, 12-month notes and bills, we'll start issuing much more 10-year and 30-year, which has happened a little bit, but I wonder if that's something that's going to happen much more aggressively under Warsh. These are the things to keep an eye on that I'm paying really close attention to. And if we start seeing that, and I really, really, really wish I could remember the third thing. But he was a very, very smart guy, real gentleman. Unfortunately, died in 2015, but very smart. And I stayed in touch with him for a few years. And I think of what he told me 20 years ago very often these days. And it's very interesting that this is all playing out the way he described.
Yeah. We live in ever-changing times. It's not. Yeah. I agree. We start pushing the debt's already. It's already. They're never going to be able to pay it back. Let's just face that. It's not going to happen. But hopefully we can survive the dollar crunch if that happens. But anyways, listen, Trey, thanks a lot for coming in.
My pleasure.
I have a lot of respect for you. You've been sending me your email for, I don't know, 10 years. And
wow.
Yeah, and I'm really happy that we hooked up.
Yeah, I'm glad. I'm enjoying it. It's working out. It's doing great. We'll try and boost the interaction, but I'm going to keep doing the Sundays thing. And for anyone who's listening, jump in.
Well, you know what? If you've got time on Friday, I'd like to, while they're doing I know you're going to be busy, but once they launch the SpaceX IPO, why don't we jump on and talk about how these charts look?
Friday may be a little difficult because I'm going to be in New York. If I can, I will, but I just can't.
Okay, no problem. No problem.
I certainly will try. I mean, maybe I just drop a couple comments in or something.
Yeah, that's
and
all right.
I'll let you know. I'll drop you an email or something, let you know what's possible.
And to tell you the truth, I don't know how this is going to end up, but I know that when you add so much supply to the market like that, I don't know. I get a bad feeling about it, but that doesn't mean that the markets are going to go down.
I think we did a little discounting last Friday. And
Yeah.
let's watch over the next couple of days. I think by the time the IPO comes out, it'll be, the funds will be there.
Yeah.
So I'm much more worried about the second one and the third one. This one will go well. The fear will get taken away. Then they're going to drop Anthropic on us. I don't know what the next one is in the pipeline, but that's when I get a little bit more worried.
Yeah, I agree. All right. Well, thanks for coming in. Hey, Marlon.
Thanks very much. Have a great
Thank you very
afternoon.
much, Marlon.
Yeah.
All right. You got it. We'll see you soon.